Welcome back, apprentice. The books are closing, monsters stirring. Meet the reconciliation monster, thriving when statements don't match QuickBooks. Brian's here to tame him.
Month end again. You know that moment. QuickBooks open, fresh coffee on the desk, bank statement sitting there like it's waiting to judge you. You're hoping the balances line up, but deep down you know there's going to be something off. And you feel that little knot in your gut. That knot, in my world, it's got a face. We call it the reconciliation monster. Welcome back to the QuickBooks Wizard Podcast. I'm Brian Cogan. I spent a lot of late nights staring at those mismatched numbers. So believe me when I say I get it. Today we're dragging that monster out into the light so we can finally shut the books at month end without a pit in the stomach feeling. There he is. Always shows up when the statement and the books don't agree. He feeds on mismatches, duplicate deposits, old checks that never cleared, things posted to the wrong date so they land in the wrong month. Every little leftover is a snack for him. Before we let him brag about his tricks, let's clear up what reconciliation actually means. So, what is a reconciliation? People hear the word and they think that's some kind of accountant-only thing. It's really not. Reconciliation just means proving every balance sheet account in QuickBooks matches the real-world source it came from. If QuickBooks says you've got $10,000 in checking, you grab the bank statement and prove there's really $10,000 sitting there. If QuickBooks shows you owe $5,200 on the company card, you open the card statement and prove it matches. Got a loan? You match the balance to the lender's statement or the amortization schedule. When the numbers tie, that account's reconciled. When they don't, the monster licks his chops. You can, and you really should, reconcile every account on your balance sheet. All your checking and savings accounts. That little petty cash box in the shop. Each credit card account. Merchant service clearing accounts. Undeposited funds. Every loan or line of credit. Sales tax payable, payroll tax liabilities, even that old suspense account you opened years ago and forgot about. If it represents real money that exists somewhere outside QuickBooks, it deserves reconciliation. There's only one line you do not reconcile, and this is the one that trips people up. Net income. That line isn't an account you can prove to a statement. It's just the math result of revenue minus expenses. It changes every time you enter a sale or a bill. At year end, that result rolls into retained earnings. That's the account you reconcile, and you do it with what accountants call a roll forward. Take the beginning balance, add this year's net income, subtract any owner draws, and add contributions. What you end up with should be the same number sitting in QuickBooks at year end. Net income itself never goes through the reconcile screen. Everything else on the balance sheet, cash, cards, loans, assets, liabilities, should be tied out to a real-world source.
Remember, apprentice, reconcile the accounts, not the math result. Tame the accounts, and the monster loses its supper.
Exactly. That one tip saves a ton of grief. I meet people all the time who spend hours trying to fix the profit line because it won't reconcile, not realizing it's never supposed to. Once you focus on the account you can actually prove, the whole process finally makes sense. Let me tell you a story. A few years back, I worked with a little cafe. 3 employees, 2 different credit card processors, the kind of place where every penny counts. Every month their profit and loss report looked fine. But the bank balance in QuickBooks never matched the actual statement, always off by $83.19. They figured it was just timing and ignored it for months. When we finally dug in, we found 2 tiny culprits. A duplicate deposit that got entered after one of the processor batches, and an old paper check to a vendor that never cleared the bank. That was it. 2 little leftovers. Put together they were enough to keep the reconciliation monster well fed and grinning in the shadows. Once we fixed those 2 entries, the books tied to the statement down to the penny. The very next reconciliation opened clean, and the monster had nothing left to chew on. That's the whole point of reconciliation. Proving every dollar in every account so nothing unexplained is left behind for the monster to snack on. Here's your first big takeaway for today. If it lives on your balance sheet, it deserves reconciliation, except net income. Clean reconciliations starve the monster. Sloppy or skipped reconciliations keep it alive and hungry. Take a minute and picture your own balance sheet. Look down the list of accounts and ask yourself, could I prove each of these to an outside statement or schedule right now if somebody asked? If you can answer yes, you're already on your way to locking that cage. If you can't, that's the crack the monster is slipping through. In the next segment, we're going to let the monster brag a little. You'll hear about his favorite tricks: duplicate deposits, date drift, opening balance gremlins, all the sneaky ways it hides mismatches so you think everything's fine when it really isn't.
You'll never catch all my little leftovers.
Oh yes, you will. Stick with me. The more you understand its tricks, the easier it is to cage it for good. If you heard the first segment, you already know what the reconciliation monster lives on: mismatched numbers. But you might be surprised at how clever it gets at hiding these leftovers. In this segment, we're going to let the monster brag a little, and I'll show you what each of those tricks really looks like inside QuickBooks, so you can spot them the next time you reconcile.
Oh, I've got plenty of tricks.
Let's start with the most common: duplicate deposits. It's so ordinary, most people never notice until month end. Here's what happens. You get a credit card batch from your processor, record it in QuickBooks. A few days later, the processor's payout hits the bank feed and somebody thinks, oh, new deposit, and adds it again. Now QuickBooks shows 2 deposits. The bank only has 1. When you try to reconcile, the numbers won't tie, and the monster gets his first snack. Anytime you see your deposit line or your deposit list in QuickBooks showing more deposits than the bank statement, suspect a duplicate. Match those processor payouts carefully. Don't add what's already been recorded. Next up, uncleared checks and lingering payments. These are the paper checks and bill payments that were cut weeks or months ago but never cleared the bank. They sit there in QuickBooks as if the money's gone, but the bank still shows it as cash on hand. When you reconcile, the book balance is lower than the bank's because those checks never cleared. Sometimes they're legitimate. The vendor just hasn't cashed them yet. But other times the check's lost or voided and nobody cleaned it up in QuickBooks. That difference can sit there for months, making every reconciliation off by the same amount. Here's my rule of thumb. If a check's been outstanding for more than 3 months, investigate. Call the vendor. Either they catch it soon or you void and reissue. Stale checks are one of the monster's favorite long-term meals. Third on the list, date drift. This one's sneaky. You enter a payment on the first of the month because that's when you cut the check. But the bank clears it on the 3rd or 4th. That's normal timing. But sometimes somebody changes that transaction date in QuickBooks to match the clear date, or worse, they accidentally post an old payment with today's date. Now the payment sits in a different period from where it belongs. When you reconcile, you can't match it to the bank line you expect, and it throws off both the current and prior month. Best practice, leave the transaction date as the date you cut or received it. QuickBooks will clear it in the reconciliation screen based on the bank's clear date. Changing entry dates later creates a time warp that the monster loves. Here's a fourth one. Opening balance gremlins. This is when an account is first set up in QuickBooks and somebody just types in a lump sum opening balance to make it match, instead of importing historical transactions or tying to the last statement. It looks fine at first glance. The balance matches the bank that day, but none of the old clear transactions exist in the register. The first time you reconcile, you got nothing to match against, and the monster sneaks right in. If you ever inherit a QuickBooks file with an opening balance equity entry sitting there, stop and rebuild that opening period. You'll save yourself weeks of frustration down the road. Fifth, a forgotten loan interest or principal splits. A lot of small business owners book the entire loan payment to loan payable, or sometimes to interest expense, whichever they pick first. The problem is every loan payment usually has part principal, part interest. If you book it all to one account, the loan balance in QuickBooks drifts away from the lender's statement over time. At reconciliation, you see a difference you can't explain, and the monster gets dessert. The fix: every month split that payment. Principal reduces the liability account, interest goes to the expense account. Then tie the liability account to the lender's amortization schedule. That keeps the monster out. Sixth, uncleared deposits or hanging undeposited funds. This one hides in plain sight. You collect a payment, record it in QuickBooks as a receive, but never group it into a deposit and send it to the bank register. It sits in undeposited funds forever. The income shows on the P&L, but the cash never lands in the bank account register. When you reconcile, you've got more income than cash, and the monster gets another bite. Clean out undeposited funds routinely. Every payment should either be deposited or cleared against a legitimate adjustment. If that balance isn't near zero, the monster is probably camped there. And finally, mismatched merchant fees. You record a $1,000 deposit from a credit processor, but the processor actually took out a $20 fee and only sent $980 to the bank. If you don't record the fee at the same time, QuickBooks thinks the full $1,000 hit the bank. At reconciliation, you can't figure out why every processor payout is short by $20. The monster doesn't care about $20. He just loves the chaos it creates when you can't match transactions. Record merchant fees right at the time of the deposit so the net amount in QuickBooks equals what hit the bank.
You've just given away all my best secrets.
Yep, that's the point. Once you know the tricks, you can see them coming. Here's the big lesson from this whole segment. Most reconciliation problems aren't huge fraud or accounting scandals. They're small timing issues, duplicates, or sloppy setups that pile up month after month. Left unchecked, they feed the monster and make every new reconciliation harder than the last. Start hunting these down one by one, and the next month's reconcile gets easier. By the third or fourth month, the monster's on a diet. Take a quick look at your own QuickBooks right now, especially the reconcile screen. If you see old uncleared checks, weird one-off deposits, or a long list sitting in undeposited funds, you've just spotted the monster's pantry. In the next segment, we'll roll up our sleeves and walk through the step-by-step routine to tame it. How to set up the reconcile window, match items, and fix what doesn't belong so the monster loses ground with every click.
Enjoy it while you can, Wizard. I'll be back.
We'll see about that. Stick with me. In segment 3, we start shrinking this thing down to size. All right, we've met the reconciliation monster. We let him strut his tricks. Now it's time to actually tame him. This is the part where most people sigh and think, ugh, the reconciliation or the reconcile screen. But stay with me. I'm going to walk you through the routine step by step. Plain English, no accounting jargon, so you can do it without panic. The first thing to know is that reconciliation is not about clicking random boxes until the difference says 0. It's about telling QuickBooks, here's the official statement from the bank or lender, and here's everything that cleared. If it cleared, check it. If it didn't, leave it unchecked. When I'm done, the cleared total in QuickBooks equals the statement ending balance. That's it. We just use the software's tool to prove the math. Number 1, start with the real-world statement. Have the actual PDF or paper statement in front of you. You need the opening balance, the ending balance, and a list of clear transactions for that period. If the statement closes on the 30th, you reconcile through the 30th. That's your wall. Nothing past that belongs in this month's reconcile. 2, use the new AI upload statement if you have it. If your QBO subscription includes the new AI-powered upload statement tool, use it. Drag your PDF or image into the reconcile window and let QBO read the statement for you. It pulls the ending balance, the closing date, and the transaction lines straight from the file. Then suggests matches to what's in your register. You skip the old step of manually keying the balances or ticking every line. The AI does the first pass. On my own cleaner accounts, this step now takes under a minute. If your books are mostly up to date, the AI matching can be that fast. Here's the important part. You still have to review. Check each suggested match. Add any service charges or interest the AI can't see, and clear up anything it flags as missing or duplicate. Think of it as a sharp assistant, not a replacement for your eyes.
Keep trusting the robots. I'll be fine.
If you don't have the AI tool yet, you'll do it the classic way. Enter the statement's ending balance and date yourself before you start checking items. Number 3, begin with deposits. I like to sort the reconcile window by amount so deposits show first. Take the statement and tick off every deposit that cleared that period. If a deposit appears on the statement, but it's not in QuickBooks, you probably never recorded it or it's still stuck in undeposited funds. If it isn't in QuickBooks, or if it's in QuickBooks but not on the statement, it hasn't cleared yet, or it's a duplicate that doesn't belong. Make a note. That's monster food you'll clean up after this session.
Hands off my snacks.
4. Then move to payments and withdrawals. Flip to the payment side. Checks, debit card swipes, ACH drafts. Same process. Anything that appears on the statement gets checked in QuickBooks. Anything missing means it wasn't entered yet, or it's sitting uncleared from a prior month. Any uncleared item older than a couple months deserves a follow-up. Sometimes it's legit. Sometimes it's a stale check that needs to be voided. 5. Keep an eye on the difference amount. While you work, watch the difference amount displayed near the top right of the reconciliation screen, right beside the little caution triangle window. As you tick items off, that number should shrink towards 0, and that's when I celebrate. If it suddenly jumps by a big amount, you probably checked something from the wrong period. Uncheck it and keep going. The monster loves when people ignore that difference and hit finish anyway. That's how messy adjustments pile up. 6. Record bank fees or interest on the spot. If you're using bank feeds correctly, those tiny service charges and interest credits usually land in QuickBooks automatically. But if they're missing, the reconcile screen is the place to add them so you're not off by a few dollars. Skip it and you'll always be off by a few bucks and never know why. We'll do a whole episode later on getting bank feeds set up the right way. That's a separate monster to tackle. 7. When the difference hits 0, click Finish. Hooray, we did it! That's the moment the monster hates. When the cleared total equals the statement's ending balance to the penny. If you've checked everything correctly and added the little fees, the difference will be exactly 0. That means the account is officially reconciled for that period, and you win! 8. Review the uncleared leftovers. After you hit Finish, run an uncleared items report or look at the register. Anything that's been sitting there for more than a couple of months needs attention. Old uncleared checks may need to be voided. Deposits that never clear may be duplicates. Cleaning them up now makes next month's reconcile faster and leaves the monster nothing to come back for. 9. Repeat for every balance sheet account. Remember, it's not just the checking account. Work down the balance sheet and reconcile every account that ties to a real-world source. Savings, every credit card, each loan or line of credit, sales tax and payroll liability accounts, even that little petty cash drawer if you keep one. Every reconciled account is another door slammed on the monster. Now here's what not to do. Don't use the force reconcile or add adjustment button just to make the difference 0. That creates a fake entry that hides the real problem. You haven't tamed the monster, you've just thrown a blanket over him so he can keep chewing underneath. Always chase the real reason for the difference before you finish.
Blankets work great for me.
Here's another tip. Once you've got 3 or 4 months of clean reconciliations in a row, you'll notice a shift. The first couple of months may take longer because you're cleaning up old leftovers. After that, the monthly reconcile becomes a quick routine, 10, maybe 15 minutes per account if you keep up with it, and even less time if you make use of the AI. And that's when the monster starts shrinking for good. I want to stress this. You're not reconciling just to please an accountant or the IRS. You're doing it so you know your cash and liabilities are real, and so the profit you see on your report is trustworthy. Whenever your account is reconciled, you can make decisions without second guessing whether the numbers are lying. Here's your key takeaway for this segment. Reconciling means proving what cleared and fixing what didn't. Use the AI upload if you have it. Still review every match. Never force adjust. And the monster loses ground every time. In our final segment, we'll talk about keeping it in its cage. The habits that keep reconciliations clean month after month. And what to watch for at year end so it doesn't sneak back when you're busy.
I was happier when nobody checked their statement.
Not anymore. Stay tuned. We're about to lock the door on him for good. Welcome back. We've introduced the reconciliation monster. We let him brag about his tricks, and we learned how to tame him one statement at a time. Now it's time for the part most people skip, keeping him locked up so he doesn't sneak back in. This is about habits, the boring sounding routines that actually save hours every month and keep your reports trustworthy. Let's start with the monthly rhythm. 1. Close each month on schedule. Pick a day. I recommend the first week after the statement closes and reconcile every active account then. Don't let 2 or 3 months slide by. That's how little leftovers grow into a whole buffet for the monster. Set a recurring calendar reminder or tasking QBO to nag you. A 15-minute habit beats a 3-hour cleanup every time. 2. Clear up old uncleared items. After each reconcile, glance at the uncleared items list. Any check or payment still sitting there for more than 2 months deserves a phone call or a void reissue. Every uncleared deposit older than a month needs to be investigated. The monster can't snack on transactions you delete or fix.
Stop raiding my pantry!
3. Tie every loan and credit card account monthly. It's tempting to leave the company card or the truck loan for year end, but that's monster territory. Those balances shift every payment because of principal versus interest and late posted card charges. Reconcile them monthly so you never face a 12-month mystery pile. 4. Don't ignore the little side accounts, savings, payroll tax liability, sales tax holding, even petty cash. They all deserve the same routine. Any balance sheet account that represents real-world money should get reconciled. Skipping them is like leaving the back door unlocked. The monster always finds it. 5. File and keep your statements. Keep each PDF in a single digital folder. 2025 statements checking, 2025 statements Visa, and so on. If you ever get audited or have to recreate history after a QBO glitch, you can prove what really cleared. Plus, if you're using the AI upload statement feature, having those PDFs ready makes reconciliation almost a drag and drop job. 6. Lock the prior period. Once a month is reconciled and your reports look right, close or lock that period in QBO with a password. That way, no one, including your future self on a late night oops spree, can accidentally change or delete a cleared transaction and throw off history. Unlock only if there's a legit correction.
You're no fun.
No. 7. Watch for unusual patterns. Run a quick reconciliation discrepancy report or just scan your next reconcile for oddities. Large uncleared checks that suddenly cleared months later. Duplicate deposits with nearly the same amounts. Items stated way outside the period. Catching these early means a 2-minute fix instead of a Saturday lost in detective mode. 8. Use your reports. They're not for taxes. When your accounts are reconciled, you can finally trust the profit and loss and the balance sheet numbers. Look at them each month. You'll spot trends in expenses, cash flow, and margins early enough instead of at tax time when it's too late to react. A reconciled set of books is a real-time dashboard for your business, not just a chore. 9. Prep for year-end early. Come December, don't wait for your CPA's request list to panic. Reconciled accounts mean you're already 90% ready. You'll just download the year's statements, give them access to QBO, and you're done. Meanwhile, the monster's stuck outside because every account already ties to the penny. 10. Train your team or future self. If anyone else touches QBO, a partner, office manager, or even your future new bookkeeper, show them this routine. Write a short SOP. Get the statement. Reconcile by the 5th. Review uncleared items. Lock the month. When the rule lives outside your head, the habit survives vacations, turnover, or just a bad memory week.
Can't you people ever take a break?
Here's the mindset shift I want you to remember. Reconciliation isn't punishment, it's insurance. 10 minutes of prevention now saves hours of cleanup later, and it keeps the monster hungry and weak. Common excuses and my counterpunches. I'm too busy. Busy now or busier later cleaning a mess. The AI does it. I don't need to look. AI is good, but it's still your name on the tax return. Review every month. I wait till tax time. That's like waiting to brush your teeth until the dentist visit. None of these excuses hold up once you felt the relief of clean books. Final thought. The reconciliation monster only grows when you ignore the basics. Make reconciliation a standing monthly date. Keep your PDFs in order. Lock each clean period. Watch the reports you've worked so hard to trust. Do that, and this monster stays locked in his cage. Small, harmless, and honestly a little bored.
Yes, I'll go bother somebody who never reconciles.
Not today, buddy.
Nice work today, apprentice. Another monster down. Keep those statements reconciled, lock your months, and you'll sleep better knowing the books are telling the truth. Join us next time when we unlock the secrets of bank feeds, your next line of defense against bookkeeping chaos. Until then, may your books always balance.